What's up, guys? Welcome back to another video. On this trade we have a long bias based on a 1 minute time frame. Now after a 50-point move up, peaking with this rather anemic liquidity grab action, the price started to stagnate just below the 40-10 area, eventually reversing and breaking structure down here before finding a base and creating these equal lows around the 39.90 zone. From a technical standpoint, after this stop hunt expedition and the printing of these higher lows indicating repricing had already started as aggressive sellers were getting absorbed by active buyers, the market, in my opinion, looked ripe for a move higher, especially after it broke structure at this level. This was suggestive that the market's temporary move against the current trend was well underway. These technical elements, combined with the oversold condition of this 20-point range, supported the case for a long scalp. My thinking was that if the price would convincingly break above the 39.95 level, we might see a move towards this imbalance zone, at the top of which, and as you can see from the chart, the top of which corresponds with the 40.04 resistance area. This is an important detail that we might have missed had we not looked to the left of our chart. And again here, guys, as I've mentioned many times before in my videos, price action trading is all about monitoring prices tick by tick as they ebb and flow. The point is, take your time when analyzing a trade. Don't make any rush decisions to buy or short just because you see a sudden spike or a major breakdown. Don't chase. Always ask first, why is this happening? What is the rationale behind these moves? Which most of the times, as we all know, are engineered liquidity traps. A certain type of level on a chart may look attractive, but is that what you should be focused on when trying to find a significant demand and supply zones? Does your bias or way of thinking leads you to the best and most reliable turns and moves in the markets? After asking these questions, you then allow price action dictate your bias, not the other way around. I get daily DMs from subs and viewers alike asking me how I am able to read price action accurately and whether they will be able to do the same. Well, I know I'm not a total dumbass, but hell, guys, I ain't smarter or intellectually superior to any of you. If I can do it, believe me, anyone can. The reason I am where I am today is because I simply put in the time and studied price action hard. In fact, I didn't just study my trading style, I obsessed over it. I spent countless hours glued to my screens, reading about different approaches, methods, systems, trying out different techniques, and track my results meticulously. I also developed a deep understanding of the market and how it works, and I applied that knowledge to my own strategies. Now, I have to say that there was no single eureka moment when I just suddenly said, quote unquote, I got it, but rather a slow and steady accumulation of knowledge and experience. Over time, I slowly but surely honed my skills and refined my approach until I arrived at the style that works best for me. Now, you don't have to go through the same nerve-wracking, I should say, and long process I went through in terms of experimenting with different strategies and then testing and backtesting them to see what works and what doesn't. But what you must do, though, if you want to be successful at this game, is first acquire some technical knowledge and then study my videos from start to finish in details. Not skip through them, but study them, I should say, religiously. Because I can say with certainty and modesty at the same time that this channel's videos, which are based on years of research and experience in the markets, these videos contain everything you need to know about effective price action trading. Getting back to our trade and more specifically our point of interest, I'm currently long, as you can see from the chart, with my first target set right into this mini swing here. I'd like to point out that these types of trades that offer minimal pullback opportunities are not difficult to read, given that once you identify a pattern on a key structural level, you will know that it is most likely trigger time.
Target filled.
Okie doke, I guess we're done with this trade, so let's just go ahead and move on to the next one. On this 60-minute chart, we can see that the price attempted to break out past the resistance level, represented by previous day's high, but failed as it didn't have enough momentum to maintain its direction. Switching here to a 1-minute time frame, we can see the formation of this double top pattern, which, as you know, is considered a bearish reversal signal. And this is because this sort of pattern indicates that the previous uptrend may be losing momentum. When you see such a pattern, it's important to take note of the neckline. This is because the neckline serves as a key level of support and resistance. If the price breaks below the neckline, it could signal a further decline. However, if the price rallies back above the neckline, it could indicate that the trend is still intact. In this case, the price failed to rally back, setting a bearish trend, which accelerated, as you can see, after these redistribution segments. And what that means is that the trend momentarily stopped its decline as the supply side absorbed new sets of buy orders that eventually got sold. And as you can see from the chart, we have the price going through a slight increase in price, after which we have this structural break followed by the market trend continuing downwards. The price then retraces higher from its newly found base around the 4002 level. This up move may find some strong resistance around 4010 level. However, a close above this region would confirm the bullish trend, and we may see the price head towards previous day's high and into the 4015 region. On the downside, a rejection of the 4010 resistance level would negate the immediate bullish bias and could push the price down to 4003-4002 level. Overall, the bias, in my view, remains bearish as long as the price stays below this descending trend line, which I think acts as resistance and indicates that a change in trend could be imminent. Based on this assumption, I decided to enter the market for a short scalp.
Order submitted. Order filled. Target filled.
Alright guys, so that should do it for today. Thanks for watching, and as always, if you liked the video, please make sure to like and subscribe to the channel. I would really appreciate it. Thanks again, and hope to see you in the next one.